stock and commodity markets are reopening after taking a beating on Friday when Israel attacked Iran. Oil is in the crosshairs. Tehran is a major oil supplier, so crude prices jumped 7% last week. Israel has been attacking energy infrastructure in the country, while Iran has been threatening to close the Strait of Hormuz. About 20% of the world's oil passes through that strait. At its narrowest, the waterway is about 33 kilometres wide, split between the territorial waters of Iran and Oman. At times of diplomatic tension, Iran has in the past threatened to disrupt shipping traffic. Well, let's bring in Naeem Aslam. He's the Chief Investment Officer at Zaye Capital Markets. He joins me now from London. Naeem, we're not just talking about disruption to shipping here, as we've seen previously, where vessels can take a longer route. Without Hormuz, you're not getting anything by sea out of the Gulf, including barrels and barrels of oil. Talk to us about the downstream impacts of that.
Sure. Thanks for having me. I think you're hitting the nail on the head by saying that, because yes, a lot of focus among investors and traders, it is all about the energy market. And of course, the recent attacks on the gas refineries over there, what that would entail for the Europe, because there could be another crisis because of that, because Iran plays a very, very imperative and important role with that one. But the important aspect out of everything is that particular Hormuz, the pathway is not only for oil. All the rest of the trade, also those particular containers and ships that go to pass that path. So if that is closed, we're going to go back to the previous chapter where these particular shipping containers from across the Atlantic, coming from China, they will have to reroute. That means shipment delays of up to 3 months or at least 2 months. Yesterday, we were having a survey with a lot of industries in Europe. And the main concern among those particular entrepreneurs were that if this particular path is closed, we are going to have another major supply shock in Europe, because we are not going to be able to get anything across from China or anywhere around that part of the world.
Well, amid all of this uncertainty, Naeem, the markets seem really not quite to know what to do with themselves.
Yeah, I think you did discuss this particular point very clearly earlier on your segment, and that is the involvement of the United States. Because market players, especially investors, are looking at that particular element. They are looking if the US or if Israel is going to gain enough sympathy to get US back this particular war once again. Because if that happens, then all bets are off. Then we're going to see a full-scale war, and then the situation will escalate to a much, much wider angle than where we are looking at things from where we are looking at things now. So I think right now, if you look at the volatility index, if you look at the other riskier assets, we do not see much of that strength in those particular ones. We don't see much panic in the market as well, because everyone is thinking that, okay, this could be one of those tit for tat, and perhaps there could be some sort of a negotiation tactics along the way. But if US gets involved, things could get very serious. And I think that is what most of the investors are very much blindsided currently not looking at that particular aspect of it.
Well, speaking of the US, if this, for instance, if the Strait of Hormuz is shut, if this conflict really starts impacting consumers in the US, could that potentially then shift US calculations around its own response to the conflict and the situation?
Well, I think President Trump is very much trying still to an extent not to get the US involved in this particular one. Although the tactics and the policies are very much questionable, how good they have been and how effective they have been. But one thing to his credit is that the US isn't really backing Israel the way that it has previously, and that has contained risk to some extent. But of course, if the US gets involved, then there's going to be a huge amount of pressure on the US economy, which is already struggling. And Donald Trump has already called the Federal Reserve the chairman of the Federal Reserve, the killer of the growth. So all those particular conversations about interest rate cut, inflation, economic growth, stagflation, everything is going to be very much in the focus. And all of this is going to impact Donald Trump massively. The last thing that he wants under the current circumstances is to become more unpopular among his base, given the fact there are so many different geopolitical events are already playing within the United States concerning LA and California.
Naeem Aslam, the Chief Investment Officer at Zaye Capital Markets, thank you so much for sharing your expertise with us here on Al Jazeera.
Make sure to subscribe to our channel to get the latest news from Al Jazeera.